NOAA published a new rule updating regulations governing deep seabed mineral exploration and commercial recovery. TMC USA has filed its first consolidated deep seabed mining application.
This allows us to apply over a larger area initially, and that de-risks our ramp-up profile. Now 25,000 square kilometers has grown to 65,000.
Welcome back to Rockstock Channel. It is Wednesday, January 28th, and today we're back with Craig Shesky, CFO of the Metals Company. Over the past few weeks, TMC has put out a string of regulatory updates, most notably that NOAA's updated deep seabed mining rules are now in effect, and TMC USA has responded by filing what it calls the first consolidated application that combines exploration and commercial recovery aimed at cutting duplication and shortening the path to first production. At the same time, CEO Gerard Barron was in Washington testifying before Congress and framing nodules in the context of U.S. mineral security. For viewers who may be new to this story, the Metals Company is a deep sea minerals developer focused on collecting and processing polymetallic nodules that contain nickel, copper, cobalt, and manganese. The company is listed on NASDAQ, ticker symbol TMC. Current share price is around $8, and the company has a market cap above $3 billion. We've had Craig on several times last year to discuss various critical milestones, including the company's robust PFS, which focused on roughly 25,000 square kilometers tied to 360 million tons of defined resources and the first declared nodule reserves. In today's update, my partner Rodney Hooper will dig into how that commercial recovery footprint has since expanded to roughly 65,000 square kilometers, and with it, the potential nodule opportunity set. As a reminder, RK Equity is an advisor to and holds equity interests in the Metals Company, but we are not, of course, financial advisors. This video is for informational purposes only and should not be considered investment advice. Please do your own research and read the disclaimer at the end of this video. And before we begin, I'd like to thank our sponsor, USCF Investments, who've been making it easier to get exposure to commodities investments for almost 20 years. USCF's Sustainable Battery Metals Strategy Fund, ZSB, is designed to capture investment exposure to metals powering electrification, such as lithium, cobalt, copper, nickel, aluminum, and silver. To learn more, watch our inaugural episode with the CEO, John Love, and visit uscfinvestments.com. We'd also like to thank Lithium Royalty Corp., which in December agreed to be acquired by Altius Minerals, a diversified royalty company based out of St. John's, Canada. Altius seeks to create value via a diversified royalty asset portfolio. LRC also acquired a 1.5% gross revenue royalty on the Goulamina project in Africa that is owned and operated by Ganfeng Lithium. And with that, Rodney will now lead with the update with Craig.
Craig, welcome back to the Rockstock channel.
Hey, Rodney, it's a pleasure to be here.
Right, so there are two main announcements that we'd like to cover today. The first is last week, NOAA published a new rule updating regulations governing deep seabed mineral exploration and commercial recovery. This effectively modernizes the federal permitting framework for U.S. companies looking to explore and recover deep sea mineral resources. How has this changed the landscape for TMC?
Well, look, I think the updated rule, the consolidated application process from NOAA, is a natural, logical next step for this industry after the very solid initial regulations were put in place in the 1980s. Initially, when NOAA came up with the exploration regulations pursuant to the Deep Seabed Hard Mineral Resources Act of 1980, those exploration regulations in 1981 assumed that anybody who would then apply for commercial recovery, and those commercial recovery regulations came about in 1989, the assumption was these contractors would be starting from scratch. Because at the time, there was only one entity that had done a sufficient amount of environmental work and research and even a lot of work on where the resource was, and that was mainly NOAA. NOAA throughout the 1970s, actually 1975 to 1981, had something known as the DOMES program, where they actually did a programmatic environmental impact statement over the entire Clarion-Clipperton zone and beyond. But it was not assumed that a contractor would have the requisite expertise or environmental data, or would have been able to fund campaigns to just put that data on a silver platter and give it to NOAA in a commercial recovery application. So TMC found itself in that position when we applied last year for both exploration licenses and a commercial recovery permit, because we had already done 15 years of data, including a decade plus of environmental research. So the executive order from President Trump last year made clear that NOAA should update the regulations, modernize it, streamline the application process, and then combine for qualified applicants the exploration license portion and the commercial recovery permit portion. So not everybody would be able to take advantage of this, but somebody in TMC situation where we've had that requisite environmental data, we feel very confident that we can take advantage of the streamlined process. So this is truly delivering on one of the key directives from the Trump executive order to modernize, streamline, and expedite the permitting for deep seabed nodule collection in areas beyond national jurisdiction. So that's exactly what this is doing. And we think ultimately it allows a company like TMC to perhaps get our permit a bit earlier than the previous sequential timeline would have allowed.
Right. So as you mentioned, the second question I had for you is TMC USA has filed its first consolidated deep seabed mining application, which has increased the commercial recovery area from 25,000 to 60,000 square kilometers. Can you talk a little about what the expected or estimated mineral resources of this enlarged area and the robustness of the application from a scientific, technical, and financial perspective?
Yeah, I'd be happy to. So thinking about the previous application, and a lot of this was detailed in our pre-feasibility study, which came out in August of 2025. The initial area that we had applied for commercial recovery was 25,000 square kilometers. That area coincided with what was known as NORI-D. That area coincided with a resource of about 360 million tons of nodules, less than half of which we anticipated picking up, and then still arriving at a pre-feasibility study net present value of $5.5 billion for that region alone, that 25,000 square kilometers. Now 25,000 square kilometers has grown to 65,000 square kilometers in the area that we're applying for commercial recovery. We anticipate that area has a resource of nodules of about 620 million tons, again, versus around 360 million in the previous application. But there's also anticipated to be some resource upside. And this resource upside, we think, could be in the ballpark of 200 million tons. But of course, after a little more work, a little more resource definition, we may be able to take some of that tonnage per SEC standards and bring it into our resource. But what this allows us to do is really, in our view, increase the total potential tonnage that we would be going after to initially mine from 360 million tons to over 800 million tons. So it's important to note what was originally part of the pre-feasibility study and also the commercial recovery permit was this dark blue block. Again, what was known as NORI-D. This dark blue block, $5.5 billion NPV, around 360 million tons of these nodules. Again, we're not picking them all up in these assumptions, but that is the basis that we're starting with. Now, instead of just this dark blue block, it's this entire area that I have on my cursor, this medium blue block, the dark blue, and then this grayish blue to the right. All of those areas are now part of our initial commercial recovery permit application. So does it mean the overall net present value of the project is going up? Does it mean we're all going to put more boats in this area and go quicker? I think what people should view this as is we are increasing the certainty that we can go from the NORI-D area to the areas that are immediately next to it. It's one continuous nodule field, effectively. We know, for example, that TUML F, which is immediately west and adjacent to NORI-D, has effectively the same nodule abundance, about 17 kilograms per square meter. It has basically the same grade of nickel copper, cobalt, and manganese. And we can make educated assumptions that the area immediately to the east also has very attractive nodule abundance and nodule grade. So I think this is exciting in terms of what it could mean for our total resource. But what it really means for investors is that rather than applying for a relatively small initial area and then assuming we then have to apply again several years down the line for another commercial recovery permit and another and another and another, this allows us to apply over a larger area initially based on the updated NOAA rules. And that de-risks, I think, our ramp-up profile.
So that was going to be my last question to you, Craig. We've seen a move in commodity prices recently. We've seen nickel take off and copper as well. How do the current spot prices look against what was used in the modeling?
They're actually pretty close to what was used in the modeling. Copper is quite a bit higher than the roughly $11,000 per ton that was assumed in our modeling. Cobalt had been quite a bit lower than what was assumed in the model, but now it caught up very quickly. Spot price is now in ballpark of what was assumed in that modeling. Nickel's close, manganese is close. So I still think we're in early innings of what is going to be, a multi-decade super cycle for some of these base metals. And I think the fact that you're seeing a lot of generalists come into this space and support, copper miners, the fact that you're seeing entities like JP Morgan deploying trillions of dollars over the next decade, focusing on supply chain resilience in America. And number one on that list from Jamie Dimon was critical minerals. This is not going away anytime soon. So I would still be pretty bullish in the long term on metal prices. But again, our pre-feasibility study and initial assessment have to be signed off by independent third-party experts. We had 9 qualified persons sign off on our pre-feasibility study, 5 of which were independent. And we had, of course, a lot of data and a lot of expertise coming from our team, including, Tony O'Sullivan, who is one of the leaders in the space, who's former head of base metals exploration at BHP. These are people who know resources. They know how to, get confidence in a resource that they're evaluating. We feel very good about this. We feel good about the other areas in the Clarion-Clipperton zone that hopefully we can get a little more data on and perhaps increase the size of that resource in the coming years. But certainly metal prices, we believe, will be a tailwind. But right now, it's actually pretty close to spot pricing versus what is in that estimate.
Okay, great. Craig, thanks very much again for coming on to the show. For those that want to follow the Metals Company, it is on X. The handle is @TheMetalsCo. So, it's great to have you on again, Craig, and look forward to seeing you shortly.
Appreciate it, Rodney.
Well, the first one is a regulatory environment. As I mentioned, China signed the Treaty of UNCLOS, and so they are bound by the rules that are yet to be established by the International Seabed Authority. The United States were a persistent objector and did not want to participate in that treaty, and so they retain their right to those critical minerals on the seafloor, and in 1980 put in place the legislation, DSHMRA, that govern both exploration and commercial recovery activities. So permitting regulatory certainty is the first thing. And then, of course, it's an awakening to the fact that the American economy imports 100% of its nickel, its cobalt, its manganese, and 50% of its copper, and that needs to change. And so I think regulatory certainty, but an awakening to the reality of the dire situation and the high dependence that America has on some of its adversaries.